Hi, I'm Theresa Wellman with HomeownerExperience.com, a local San Jose, California realtor. And today we're going to talk about, has COVID-19 affected Bay Area housing prices? Okay, there's a lot of fear with the shelter in place going on with coronavirus. Part of that fear is related to the questions of the housing market falling, the economy falling, a recession, all of these items swirling around in people's heads. So what I want to do today is really go through some actual facts and data to understand the housing market and what's happening and how you can stay on track to know which direction the market is trending. I want to take a deep dive today. If you normally watch my videos, you know I do an overview of the statistics, but things are changing so quickly right now that I really want to dig in and help you understand the fundamentals and how to stay on top of tracking the market. So the simple answer, has coronavirus changed housing prices? Well, it's really too soon to tell. That's the quick and easy answer. So I'm going to help you dig into the leading indicators and other factors to monitor which direction it's trending. So here you'll see a Bay Area housing prices graph. This is Santa Clara County, and as you can note, the last 2 to 3 years, prices have been fluctuating quite a bit. February 2020 had closed sales where prices were back up, but the peak of the market actually was May 2018, and then it's been up and down since then, with the valleys correlating to about mid of 2017. And the most recent peak was May 2018. So prices have been up and down. Definitely, if you draw and see this line, I wouldn't say we've appreciated or depreciated, just kind of been a little sporadic. So will coronavirus put the U.S. in a recession or a housing crisis? Well, first off, let's not get ahead of ourselves. Housing prices, of course, do fluctuate, but not as drastically as stock market prices. If COVID-19 blows over soon, it may not create a housing market slowdown, but the length of the coronavirus shelter in place will definitely play a role in the overall economic impact. So the reality is that Santa Clara County home prices do tend to fall during a recession, but to the extent of which that happens can really vary by area. So if you'd like to look at my blog post where I talk about these topics and review the last couple recessions in Santa Clara home prices, please do look at the blog link below. Now let's talk about the market in San Jose before the shelter-in-place mandate was placed. As shown previously in the Santa Clara County chart, and then now in this San Jose specific chart, the South Bay area was in a very low inventory market starting out in 2020. Now that's the yellow line here on the chart. That was indicating that we were in a strong seller's market because we had strong buyer demand against that very low inventory. Many properties for sale were receiving multiple offers, and 2020 was shaping up to be a very strong home sale year with similar characteristics to early 2018. Now, if you want to stay informed, you definitely want to sign up for my monthly video update. I'll put the link below. So how do we know if coronavirus has had an effect on the prices? Well, home prices in the Bay Area, as shown above in the graph, are actually a slight trailing indicator of the market. The closed sale prices of February 2020 were actually properties that went into contract either late December or early to mid-January, and then closed in February. So pricing on this chart is actually a trailing indicator, typically 4 to 6 weeks behind the actual market. Now, we've only been in the shelter in place for not quite 2 weeks. So that's why my simple answer was it's definitely too early to tell if prices have been affected yet. But properties selling today will not be closed until April or maybe even shown in the May data, which is still quite a ways away to really understand if prices have truly been affected. What I want to teach you is some leading indicators to help understand the direction of the market and how it's looking. And of course, if you're not looking to buy or sell right now, don't worry about this stuff. But if you are looking to make a move soon, how can you make that best decision? Well, of course, it's going to be looking at those market factors and indicators to pick out the right time for you to make a move. So let's talk about the leading indicators of the housing market. There are several that I frequently track. So if you've watched my videos before, you'll be familiar with some of these. But I'm going to go into an even more in-depth view today because I want to understand what's happened in just the last 2 weeks. So the first tracking indicator that I talk about is traffic through properties. I do talk about that fairly frequently if I've had an open house or I've heard a particular situation from other agents in my office. Next is how many offers were received on prime properties. Also, we're going to talk about the number of properties going into contract each week and the number of closings each week. That is an actual number that we can track starting today. So that's going to provide some valuable insight. Also, the relationship of supply and demand, or what I call days of inventory. I also frequently talk about that. Then we're going to talk about local unemployment rates, mortgage interest rates, and the stock market. So let's go ahead and take a deep dive into each of these and learn a little bit more about what's actually happened since March 17th. Okay, as you would expect, as of March 17th, we did see a sudden shift in the real estate market. So let's talk about not just the fear or what we think happened, but let's talk about some actual facts. So let's dig into this. Traffic through properties has dropped to almost none. I think you would expect that because we were ordered to stay home and only go out for essential items. So that has definitely affected how many buyers are out there looking at buying houses. All open houses were, of course, canceled. And the only properties that I've seen are getting some showings are actual vacant properties because I think people feel a little bit more safe to be able to go take a look at those properties. So a huge change in this category of traffic through properties, of course. The next one is the number of offers on prime properties. Before this, we were seeing about 8 to 10 offers on really highly desirable properties. Well, I had one of those properties put on the market on March 10th. We took offers on March 18th, right after the shelter in place. So we did have time to market the property before the mandate was there, but there was a lot of fear those first couple days and people trying to get their bearings. So we did experience a lot less offers than I would have expected. So we just got a few on that really prime property. And the properties that are probably selling right now are getting 2, maybe just 1 offer. Now the next category is a number of properties going into contract and closing. And I want to break that down by each week so we really understand the changes that are happening. So take a look at this actual data that I've gathered so that you have a sense and we can quantify what is actually happening. Inventory the first week was down 15% in the county and in San Jose, or 14.5% in the county. And you would expect that. What happened, I think, there was a lot of sellers that had some fear or didn't want people coming through their properties, so they pulled their houses off the market. Now, if we skip ahead to the next week, I kind of did a sneak peek of Sunday to Sunday since we haven't been in the shelter in place for 2 full weeks yet. And you note that the actual inventory has gone back up. So maybe those were sellers who were planning on putting their house on the market, still continue to do that. Maybe they're vacant, maybe they're not. They just want to get the exposure on the market. The biggest change, of course, is the number of pending sales that went into contract. Wow, look at that. So that first full Sunday to Sunday week that we've been in shelter in place, sales are down 56%. That is definitely significant. The really telling data will be as we go week by week to understand if this continues to change or if we're going to be holding at this new normal. So another way to quantify this is based on days of inventory or the relationship of sales and inventory. So let's dig into that. Normally that's a factor that is calculated with the closed sales versus the current inventory. So if we take a look at the San Jose data, in February 2020, we had 25 days of inventory using the closed sales that we had that month. Now, if we take a slightly different look so that we can anticipate changes sooner, let's look at the pending sales. If we use the pending sales versus the current inventory, we come up with 19 days of inventory. So that tells me that the market in February was definitely heating up. Less inventory staying on the market, more buyers buying those properties. This is a really good leading indicator. If we use the same data, as we noted above, we know that the actual inventory and sales shifted due to the shelter in place. So let's try to quantify that market change. So if I use the first week of shelter in place pending sales rate versus the current inventory, the calculation reads back to 25 days of inventory. So as we went from 25 to 19, back up to 25, we definitely saw a shift that first week. Now, if we use that Sunday to Sunday sneak preview data, what does that calculate out to? Wow, that's just another big change. And the reason is we saw the inventory went up, if you remember from the last chart, as well as sales went even more down. So in from 25 days of pending days of inventory in San Jose all the way up to 60 days. And if we look also at the Santa Clara County numbers across the county, we went from 25 in February of pending to 38 that first week and to 73 from Sunday to Sunday. So definitely there has been a huge shift with days of inventory doubling in most cases. But before you get too freaked out and worried, I want to put this in perspective. Now, days of inventory is something, like I said, that I've tracked for a really long time. So if we look here at the Santa Clara County chart of days of inventory all the way since 2000, you'll note the days of inventory number is actually the blue line. So follow that blue line relative to the dashed red line that's going across. That dashed red line is put at 90 days of inventory. That is where I say we shift from a buyer to a seller's market. And it's not black and white. We all know that. It's kind of gray on either side. So maybe 75 to say 100 is more of a neutral market where there's a little bit more negotiation going on between buyer and seller. So anything under that 90 or really 75-ish range is still considered a seller's market, just a little bit slower and not as intense. And so we are currently in the 70-ish range, right around that cusp of when we're going to get to be a little bit more of a neutral market where buyers and sellers are going to be negotiating a little bit more. Now, when was the last time we were actually at that value? Really wasn't that long ago. It was actually in January 2019. So at this point, you maybe could consider the current market as a second winter. We're kind of on pause. Buyers aren't able to get out there and buy. Some sellers are going to hold their properties off the market until the buying season heats up again. That's typical what would happen in the winter anyway. And as the spring market comes, more people get out there, more inventory gets on the market. So I want to propose that we're kind of in a second winter here. This is, of course, very unusual circumstances, and I believe we're going to have some pent-up buyer demand because of all of this. So how will we come out of that will be really interesting. So again, I'm going to continue to monitor this week by week as we stay in the shelter in place and as we start coming out to give you an idea of how that market is changing. Definitely sign up for my market videos to stay informed of those market changes, the links below. Okay, the last couple things that I want to talk about as far as leading indicators are the unemployment market and the mortgage interest rates. So as we know, a lot of people are losing their jobs right now, but that's mostly service staff, restaurant staff, things like that. And hopefully that's just temporary. Hopefully that unemployment rate that might spike here soon is going to decrease as well once we get this shelter in place passed. Mortgage interest rates are low, and the federal funds rate, as I'm sure a lot of you have heard, is pretty much at zero. Now, that's not exactly mortgage interest rates. Really, it is influencing the mortgage interest rate. So mortgage interest rates are staying pretty low, definitely in the mid 3% range. And so it's a great time for buyers to buy if you've got the financial stability in order to take a move into a house. So lastly, let's go into the stock market performance. In this local area, a lot of the down payment, because prices are so expensive, come from stock options. A lot of high-tech buyers with RSUs, stock options, that liquidate those funds to go ahead and put a down payment on a house. So because of that close tie, you wouldn't probably be surprised that the stock market and the housing market kind of follow each other in a similar trend. So we definitely track that. And I want to talk a little bit more in detail about the S&P 500. Because those are the large companies, a lot of which are here in Silicon Valley. Here's the chart since 2000 of the two indicators. You'll see yellow circles where there are areas where these two numbers went in opposition. The orange line being the average prices in Santa Clara County, and the green line is the S&P 500. So the largest difference or opposition actually was just recently. In the last 8 months or so, you're going to see that the stock market greatly appreciated when the housing market didn't. So I'm going to zoom in there so you can get a little bit better idea. So as noted in this chart, June 2019 was the most recent housing price peak. And at that point, the S&P 500 continued to see extensive appreciation, but the Santa Clara County home prices had softened. So that is quite a big change there. But now we've had a recent drastic decline in the stock market value due to the coronavirus impact, and that subtracted a huge part of that stock market gain over the last several months. Now, if you look at that, our stock market price is almost back in line with the housing prices. Very interesting, right? So as evident from this chart, there were several peaks and valleys over the last few years, but today both the S&P 500 and local housing prices are much more lined up in value as per history with this factor. So in conclusion, will COVID-19 push home values lower? Well, it is definitely true. The pandemic is putting people out of work and we might be heading into a recession. Today's real estate prices and real estate market is nothing like 2008 or 2001 because of the market fundamentals that we're going in with. We had a very strong real estate market coming into this, a very low inventory and low interest rates. We have healthy local corporations that are still continuing to operate with sheltering in place and having their employees work from home. And we have a balanced and controlled banking system, unlike 2006, 2007, and 2008. So there are no signs of a crash on the horizon, though we may experience some softening due to a recession. So definitely check out my blog where I study some of those in the past. But this slight housing market slowdown can probably be weathered because of the strong market fundamentals that we have. I think this pent-up demand and this pause in inventory will definitely break free once we are out of the shelter in place. And areas of high demand, homeowners may not see their property values go down at all. Mortgage rates are so low, prospective buyers who are trying to get in and still have the capability are going to want to take and grab those prime properties. So you may want to try to capitalize on the opportunity to purchase a property sooner rather than later, because as a buyer, you're going to have great interest rates and a little bit more negotiation power. The only time, of course, will tell. So stay tuned as I continue to monitor the market week by week. You can check out my blog for weekly updates and sign up for monthly videos to keep you informed of what's actually going on. Thank you so much for watching. I really appreciate it. If you love this material that I present, please consider subscribing. Thanks.